Since May 2019, the US-China trade war escalated, with the United States raising the tariffs toward Chinese goods to $250 billion whereas China's only amount to $110 billion. Since then, the S&P 500 fell by 7%, but then crawled back up to its previous levels due to hopes of decreased interest rates. On Saturday, June 29, 2019, Presidents Trump and Xi met during the G20 summit as promised. Trump promised not to impose additional tariffs for the time being and that both sides will restart negotiations from where they left off. In addition, China promised to support the US economy by purchasing products from the US farmers in an act of good faith towards a deal. Many people and experts suggest that the recession is approaching and that the US-China trade war might be in the center. The fact that these talks will continue is a short-term positive outcome, leading to a positive trend from the stock market side. However, this does not change the long-term outlook of most experts and even the IMFs and the central banks. In order for those long-term outlooks to change, both sides need to reach an agreement. Before the latest increase in tariffs, both sides seemed to be positive and optimistic, but then they both raised tariffs out of nowhere. Therefore, how can this time be any different? Well, it is obvious that both sides need a deal, as it is hurting both economies. Another reason is the fact that elections are not that far away and Trump would love to make a great impression by solving such a huge problem. Nevertheless, you should remain cautious and invest a portion of your capital into safer assets such as cyclicals, gold, or silver, and wait for clues as to what is happening during future talks between the United States and China. One thing is certain, if there's a resolution, stocks will skyrocket. If more tariffs are imposed, a crisis will be imminent. Companies will start revising their earnings estimates, investors will be looking for safer investments or converting to cash, and central banks will revise their own global economic outlook. Therefore, my advice would be to follow the news and the current positive trend, but remain cautious and always protect your positions according to what we discussed in our course and guidebook, which you can access using the links below, and do not forget to stay tuned to our channel.